All right, everyone, here we are with ticker symbol WWR, Westwater Resources Inc. And before we jump into this chart, I want to say welcome to all my first-time viewers and investors. Welcome to my channel, Invest for Tomorrow. To all my subscribers, welcome back, and let's jump into this chart. So, Westwater Resources Inc. has actually been in a slight dip, rise, and a dip again. But when you look at it, it fell and it's kind of gone sideways since it fell. It slightly recovered and then it fell right back to around the same range that it fell to. Obviously, it hit lows of 440. It's at 450, 10 cents away. So we're going to look at our new support and our new resistance levels based off of what this chart is showing us, and also how it reacted. So right now, this is the highest point reach in the recovery, which is an important resistance level, and this is the lowest point before that recovery, and then here we are in sideways movement. So we're going to look at this pretty closely right now. So for the bulls to have momentum and stay above the 50-day moving average in bullish territory, they need to break through this resistance, which is 501. By breaking through 501 and turning it into a support, they can pull away from the 50-day moving average in an upward direction. So super important for the bulls. Now, in a more narrow approach, this is one of the highest points before it continued to fall. So you can use this as a sense of direction, which is 478, to see if the bulls are actually gaining traction to head towards 501. But 501 is one of the most important numbers right now for the bulls to pull away from the 50-day moving average and get deeper into bullish territory. On the other hand, we have what the bears want. Obviously, the lowest point reach is down here at 440, as I stated, and our 50-day moving average is 440 as well. So that support level and the 50-day moving average landing on the same number is super important to keep in mind and pay close attention to on how the stock is reacting once it breaks through the lowest point before it ran up, and that's 442. That's only a 2-cent difference. So if this breaks through support, this could be well on its way into bearish territory by breaking through the 50-day moving average, and you'll have to pay very close attention to it and see how it's reacting. So 442 is our current support, and then our 50-day moving average is linked exactly to the lowest point of the day, which is 440. So if 442 gets broken through, again, that's a 2-cent difference. This could be on its way to break through the 50-day moving average and end up in bearish territory. Now, the tug of war will be interesting between the bulls and the bears, but you still have to pay very close attention to how quickly this is hitting newer lows. Are the bulls having a chance to reappear, or is this breaking through the 50-day moving average and pulling further away from it in a downward direction? So keep those numbers in mind, pay close attention to these cues, and the bulls have to break through 501 to go ahead and continue to work their way deeper into bullish territory, pulling away from the 50-day moving average in an upward direction. As always, if you found this video helpful and informative, please do so and subscribe. Don't forget to click on the bell to turn on all notifications. Don't forget to share this with your friends and community as well if you found this insight helpful and informative. And also hit that like button for me to let me know you watched this video. Thank you guys so much for watching, and let's make some money. At the end of this video, there's going to be a pop-up video, and I go into detail about the S&P 500 index and how it's been rising up several points on scheduled dates. What happens on those scheduled dates, which are the dates that I circled here on the chart and we're going to see for ourselves? Well, the S&P 500 index rises up several points, and by doing so, they're bringing up several ticker symbols, not all of them, but most of them, up with them. And these ticker symbols are rising up 30 cents to $3 per share. And I know it doesn't sound like a lot, but per share, that does add up. And one thing I am really big on is profits. If you put $1 into the market and you get out with $2, you've made profits. You've done what the whole purpose of being in the market is for, to maximize profits and minimize losses. And with the Federal Reserve pumping the markets on these scheduled dates, bringing the S&P 500 index up also brings up individual ticker symbols with them. And again, 30 cents to $3 may not sound like a lot of profit per share, but that does add up. And like I say, profits are profits. So we're going to look here at some of the dates so that you guys can see what I talk about in the video. And it's a weekly series. I wouldn't want you guys to miss out on it. Definitely click on the video as it pops up at the end of the video and check it out. But here we are with one of the first pumps in the scheduled dates pumps. So the first one, since the last time that they had released this, they released this on September 14th, and the next one's coming up on October 14th, which is like a week from now. And on the 15th, they scheduled it. And as you can see, this is the 14th, and the 15th is this big green bar, and it rose up. So on the 14th, we were at around 33.84, and it rose up to 34.20. I mean, that's 40 points risen on the S&P 500 index, and that's creating that catalyst for individual ticker symbols to rise up 30 cents to $3. We're going to look at another one here, and the next one was on September 22nd. And here we are on the 21st, after falling from that last pump, and the market had been falling, and you could see that there is volatility on every single day of the market before the dates of the pumps, but on the dates of the pumps are the days that the most green happens, for the most part. Not every time, but for the most part. But on the 21st, which was a Monday, it was rising up, and it rose up to this point here. And the next one was the 22nd. So this is the last 21st candlestick, and this is the first 22nd candlesticks. And we were at 32.70. This one rose up all the way up here to this point right here. This was the last 22nd candlestick to 33.19. I mean, if we go back, we were at 32.70, 33.19. That's almost 50-point jump here for the S&P 500 index. And again, individual ticker symbols rose up with it, and it created that catalyst a little bit before the anticipation, and on that date it rose up. Now on this next pump, which was a little bit different, there was a catalyst formed beforehand, and it rose up to these highs on the 28th of about 33.59. It actually dipped on the date of the next pump, which we see it here, which was on the 29th of September, and the next one was on the 6th, which just happened yesterday, and it actually slightly dipped. Now, not every time is these pumps going to rise up the market like we've seen here by a lot of points, but it still rises it back up or levels it off from hitting newer lows and leveling off the market itself. Because if we look at the previous notes that I did beforehand, it was actually rising up with it. The volatility was there, but you were able to buy, like for example, how we bought here on the 15th and it rose up. Well, it's been falling and then very volatile here, up and down. Beforehand, you can buy at the beginning of the scheduled pump dates and hold a couple weeks and ride out several pumps, and you were going on your way up. But right now, even as the market's going down, it's a great opportunity to take advantage of the fact that the Federal Reserve is pumping the markets, and there's an opportunity to make profits. So here we are on the 29th, and it fell to lows of 33.28, and it rose up to these highs here of 33.49. I know it doesn't sound like a lot, but that's still a 20-point jump after dipping and recovering, and then it continued to work its way up to newer highs. Now here on the 6th, which on the 5th it started to rise, it leveled off. This is the last candlestick of the 5th coming up right now, and we're about to see it here. Yes, this is the last candlestick of the 5th, and it rose up, and all the way to the last candlestick of the 6th, it rose up another 20 points. I mean, we're down here, and it ended up around here. So right now, something I'm noticing is that these pumps are creating less of an effect on the market, but it's creating that upward direction from falling to newer lows, but it's still helping the market rise up. And even though the S&P 500 index is rising several points, there are individual ticker symbols rising up, like I said, 30 cents to $3. Check out the video. I go into more detail. I don't want you guys to miss out on this great information. Click on it, and thank you guys so much for watching, and let's make some money.